Hi, morning. Congratulations on a very strong quarter. What's led to this kind of strong high revenue growth, EBIT margin expansion, and as I understand, the highest ever order book as well, and a revised guidance?
Thanks to our great work done by our teams, confidence from our customers, and a lot of guidance and wishes from our stakeholders, we've been able to deliver, like you've seen, 6.8% sequential quarter-on-quarter growth and EBIT margin expansion as well, quarter-on-quarter sequentially. This has been driven by two or three things. There's no single reason. One being that there were deals that we were pursuing that we've been able to close. We've had the highest order book so far, actually double of what we did the previous quarter, including a $100 million deal, as well as 7 deals more than $10 million and two $15 million deals. Second, we have seen digital spends increasing across our industry segments. So industrial products, plant engineering, as well as telecom high-tech grew for us, more than 5% sequential, and a significant part of that came from digital engineering. Third, we saw expansion in transportation in the areas of connected, electric, and autonomous vehicles. And in the medical space, we were a little lower in growth, but that was again based on the work that we've been doing for emergency authorization usage, helping our clients, etc. So overall, across broad-based and 2 or 3 reasons that has helped us this quarter.
Right. Amit, the largest deal bookings were the highest ever, and as I understand, helped by the marquee $100 million plus deal that we signed in the plant engineering segment as well. Give us more color on the deal wins, which the industry verticals belong to. Also, what is the future pipeline looking like?
Sure. So the ones that we've already announced in December. So one of them was a $100 million TCV deal from an oil and gas major to provide them engineering support as well as digital transformation services for 2 of their large assets in the US. The work on this will start sometime towards the end of Feb, early March. So that's the first one. The second one that we announced was with Schindler, where we have been selected as a partner for our digital engineering capabilities to help them with digitization as well as connectivity. So that was the second one that we had announced. Outside of that, 2 other significant ones for us. One has been in the healthcare space, and this is a current client. We've been selected by them as one of their strategic global engineering suppliers to help them transform their product portfolio. And the fourth one, noteworthy here, is working with a leading mobility OEM for their marine digital platform to provide a complete solution from hardware IoT to cloud infra, mobile app to customer managed services. Outside of this, we continue to pursue various deals in the marketplace, and these are in the areas in transportation, in the areas of electric, autonomous vehicles. It's in the area of industrial products, further digitization for their products and their platforms and shop floor and engineering value centers in the plant engineering segment. We are also excited about the medical and healthcare segment where we are pursuing multiple deals right now, again around product transformation and shop floor transformation.
Right, and EBIT margins as well have expanded in the third quarter. Is there room for further expansion, and what is going to be the factors that will drive this margin growth? And are you looking at any wage hikes or promotions as well? And what would be the impact of that then on your margins?
Okay, so number one, as we shared earlier after our results, is that we are going to make best efforts to come back to Q4 levels in Q4. Q4 of last year, we were 16+% EBIT. So our endeavor will be to get back to 16+% EBIT, the same as Q4 levels in Q4 of this year. So that's number one. which basically means that there is headroom for us to expand margins further. If you look at what we have done so far, our utilization today has improved to 77. Our utilization has improved today. Our offshore ratio has gone up as well. And we expect this to further improve as we move forward. To be exact, we've gone to 77.5% utilization. Our headcount has slightly only increased, and our offshoring percentage has gone up to 57%. And we expect a little bit more movement positively, and we do expect that that will help us in terms of improving our margins. Going on to wage hikes, we have announced that we will be doing wage hikes in two parts. For the junior and middle grade employees, we will be doing the increments from 1st of April. And for the senior management, there will be increments that will come into play from 1st of July. We do believe that we have some headroom to be able to take up and manage some of this as we have done every year in our P&L.
Amit, we'll let you go on that note. Thanks for your time and giving us a view as to how the earnings have shaped up. Completely out of time. What a momentous day it's been, and we'll continue to track that 50K journey on the Sensex as we wind it down right here on the show. Thanks so much from the team that put the show together for watching.